Standards Part 2. This today's lecture meeting is also a part of the overall a series of programs that WRC has been doing on standards on auditing, and today we have some very important standard auditing standards to cover, which are of a specialized nature, and possibly we need to be aware of this because sometimes we may be performing some of these assignments and we are not really aware that we actually there are engagement standards, auditing standards, which we need to comply with. So today we will be discussing SA 800, 899, that is audit of specialized areas, special considerations, standards on review engagements, assurance engagements other than review of historical financial information, and also standards on related services, including compilation engagements. So these are some jobs which a lot of times some of us may be doing, but we may not be aware, and that's why we need to be very today's session is very important. Before we go any further, I request everybody to come to attention for the ICI motto.
येष सुप्तेषु जाग्रति, येष सुप्तेषु जाग्रति, कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः, तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा, तदेवामृतमुच्यते, तस्मिन् लोकः शतः, सर्वे तदूनाद्यपि कश्चन एतद्वैता 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 एतद्वैता.
Thank you. So today we have with us our faculty for today's session, CA Pritesh Amin. I also have with me CA Ishwar Jivani, my fellow regional council members. First, also, I would like to thank the participants. We have been really very encouraged by the massive response that we have got to our series on standards on auditing, and it just goes on to show that our fellow practicing chartered accountants and the members in industry are now becoming more and more aware of the standards on auditing, which was a very ignored area of our knowledge when we look at what we apply in a day-to-day life. Also, just a point, my special thanks to the faculty today, CA Pritesh Amin. He is not very well, and in the morning he actually called me up to say that he might not be able to attend. I especially requested that, looking to the massive response and registrations that we have got, I requested him to continue. He has kindly accepted to continue with the lecture. Of course, he has requested that instead of 2 hours, he may wind up the lecture a little early, so that as he's got a very bad throat. Now I would request CA Ishwar Jivani, my fellow regional council member, to kindly introduce CA Pritesh Amin, our today's faculty.
Thank you, Rahul Bhai. Respected CA Pritesh Amin, who is faculty today, my regional council colleague CA Rahul Parikh, and my dear professional colleagues, a very good evening to all of you. It gives me an immense pleasure to introduce before you our today's faculty, CA Pritesh Ji, who is a partner with KC Mehta and Company, prior to which he led Deloitte's Baroda office external audit practice, and he had been with Deloitte for over 15 years. He has experience in many fields like audit under IFRS, US GAAP, due diligence reviews for takeover propositions, for strategic alliances, and for spin-off of units, advisory services in connection with IPO, management and internal audit, statutory audits, and internal audits, advisory services in connection with shares, valuation, business setup, etc. So he's having wide range of experience. He has been on short-term secondment to Australia, and also he has been on just-in-time programs to US and UK. He has provided audit and assurance services under USDF and IFRS. He has wide experience in different business segments like manufacturing, automotive, chemicals, engineering, oil and gas. He is Bachelor of Commerce from MS University, from which I also did my BCom. He is an associate member of our institute since 1998. With this, I introduce before you our today's faculty, Pritesh ji, and I request Pritesh ji to enlighten the audience at large. Thank you, Pritesh ji.
Okay.
Pritesh, the floor is yours.
Yeah. First, let me start off with a namaste. Thank you for the kind and the generous introduction as well. But it was, in a lifetime ago, sort of a thing, all this work and everything. But nevertheless, I've been a little down the weather, under the weather as such today. And I have a little sore throat. So I'll try and put it up and hopefully it'll be very clear to you. Right? You can tell me when it is not so. So I'll repeat myself to that extent. I am trying to, dilute the subject matter, but without losing the relevance and the importance of it. Right? So I will dilute it and I'll obviously provide you all the sources of information, the reference material and the like. I don't have to prepare anything. The way Institute has already done, there's a good amount of material which the Institute has already put up. The Auditing Standards Board has done a good amount of work in terms of putting out all of the material in terms of, short narratives, PPTs, MCQs, whatever, of the standards itself. In addition to the standards, this amount of material is already available to everyone, publicly available, freely available, to go back, refer, right, and improve ourselves in that sense. In addition to all these webcasts and live series. So it's a good program which WIC has undertaken, the series of program, and the participation is also very, very, very encouraging as such. So let me, without further ado, get right into the subject, right? So the way I have structured it, let me share my screen in the first instance. Yeah, as you see my PPT, it's only 5 slides. Right? First slide and the last slide, everyone knows what it is. The first slide is the current and the last slide is thank you. Actually, this is it. The reference material. I'll just talk to you from there. Nothing beyond that. See, EQCS is the Engagement Quality Control Standards. I just put up a link for it where you can refer to from the ICA website. Again, publicly available. Anyone can download at any point in time, can refer to it completely. I'm sure all of us have done it over a period of time. But if you want to go back to it, there's no substitute for the entire standard as such also. Okay. The second one, guidance note on reports or certificates for special purposes. I'll come to the point why I put up this link in a short time when we actually move forward. Guidance on reports in company prospectus, which is to say IPO, OFS, and the like, when a company or issuer is trying to go in for a listing, basically, right? So this is when that guidance note is applicable. Again, I'll come to you in short time. Background material for audit training, workshops, and seminars. Now, this is what we are going to refer to primarily. This background material, this is publicly available. This is put up on the ICA website. I put the direct link out here. Right? This is the very same material. A manual of presentation on engagement and quality control standards. It's a 500-page document. It contains a PPT of all the standards, all EQSC, right? As you move forward, it's an official ICI document as such. If you want, you can purchase a hard copy of it, or you can do with a soft copy also. You can download it freely as such. It contains all standards. Then there's a ready reference on EQSC, right? That is this one. This is a 200-page document of all standards, short narratives. A standard could be narrated within a page of, a 4-page or 5-page summary. A 33-page standard in a 4 or 5-page is a very good thing, right? It brings out all the essential items. It's a very good summary as such. And linked to this ready referencer are the MCQs, multiple choice questions. This has also been put up by ICI, right? Where you can test yourself, where you want, you can give it to your team also to let them get tested, right? And where they identify those areas where they need to work on, they can directly get into those areas. They can read up the standards per se, or they can also go to the background material or the ready reference, as the case may be, right? This are MCQs for each and every standard. So a good amount of work has already been done, put up publicly by ICI, freely available. Anyone can download it anywhere. Okay. So this is one thing. So I'm not reinventing the wheel to that extent. I don't believe in doing so. I could have put up the PPT, but if you look at a PPT which is much more colorful, the objective will remain the same. But time we are trying to do is basically, bring out the essential items in the standard and present it to you so we can actually implement it where it is required and apply it where it is required to. Otherwise, the standard is already available. So I just put up, this is my reference material, right? This is what we are going to use today. This is what we are going to discuss about today. Okay. Now, this is the background material. I just provided certain page numbers specific in reference to the standards which I am going to take up, right? First is a broad outline in terms of standards. Since you're already going through the series on auditing standards, the first three, which I am stated out here, brief narrative standards, list of EQCS, and structure of standards, which is a diagrammatic form, you would have already seen it in other PPTs, and other presenters would already made that out and given it to you. So I will restrict myself furthermore on SA 800 and upwards, right? So SA 800 onwards, which is the specialized sections or specialized standards actually, which are a part of standards in auditing, but which are specialized standards. So there are three on that front. Then there are SREs, which are standards on review engagements. That is typically a quarterly reviews. As you would be aware, in terms of a listed company, you got a limited review. So those are two standards as such. Then there are standards on assurance engagement, which are three more. And there are standard on related services, which are two more. So in total, we are going to talk about 10 standards, not with equal distribution and not with equal time. I am going to take up which I think is the most relevant in terms of the given times and what we are dealing with. If anyone has a question specifically on those standards, which probably I'm not devoting so much time, I'm more than happy to take it offline also, right? So probably they'll share the details with you as a faculty member, my numbers and the like, the contact details. I'm more than happy to discuss at that time, right? I'm only going to limit myself to those standards which have great relevance in terms of what we do typically or generally. Okay. Now, having talked about the page number reference, this is it. This is the last slide. Okay. Now let me go back to the background material. This everyone is aware. Standards on auditing to be applied on the audit of historical financial information. Standards and review engagements. Again, as against an audit, this is a review of historical financial information. We all are aware what an audit entails and what a review entails, broadly speaking. Audit would be a reasonable assurance, would be a positive assurance versus a review, which would be a limited assurance and which would be typically a negative assurance, right? Standards on assurance engagements. Now, this is not an audit, this is not a review, but nevertheless, you're giving some sort of an assurance, right? So this is not on audits and reviews of historical financial information. The only difference is out there. It does not have a linkage with historical financial information. It could be prospective financial information. It could be in terms of controls at a service organization. It could be in terms of, pro forma financial information to be presented in a prospectus. Okay. Then there are standards on related services. Again, this does not have an assurance angle to it. No assurance at all. You're not going to issue out a report having an opinion. Okay. You're not going to express an opinion. You're only going to perform agreed upon procedures. Your association may lend credibility to that output, right? But it is not an opinion per se in that sense. So those are standards on related services. Now, moving forward, obviously, this category you are well aware. Specialized areas, which is what we are going to start from. So, specialized areas 800 to 899, three standards. This review engagement, two standards. Assurance, three, and again, two out there. This gives you a listing of all the standards. specialized areas, effective period. We don't need to be bothered about it because all of them are applicable right from 2011 or so, 2016 at the latest. So all of them are applicable in the current period. So we have no botheration in terms of when it was applicable and when it was not, right? So standards on review engagements. Now we have to identify which standard would be applicable to particular engagement, right? Typically that becomes a little challenging on some occasion, on some engagements, basically. Now, one specific example that I can take you through, which will cover many of the standards out here, is a company or an issuer who's going out for an IPO or who's in the process of listing. People who have been involved on a company or a client as such, which is in the process of getting itself listed and who has worked on that process, right? As a stat auditor, who have issued out many reports and certificates, would know many of these things. But nevertheless, let me take you through that. So that is why I want to bring in here guidance note on reports and company prospectus. This is also again a publicly available document issued by ICI way back in 2019, revised one. This have been there from 2016, prior to that 2009, and many other years edition, right? So 2019 being the latest one. So guidance note on reports and company prospectus. I'm going to take you through what happens in an IPO process and how many standards that we are going to refer to today. That is what I'm going to look at. We will get covered out here. That is what will be of interest to you. Because one simple example of this sort will give you an idea where all it is applicable. Then I'll take you through the standards briefly in terms of what it contains. I'm sure many of you are aware of it. And if not, also this material available, the background material and the ready reference would also make it very, very easy for anyone to refer to at any point in time also. Right? So let me take you through this. Can someone just confirm that whether everything is visible and I'm properly audible also? Through the chat mode, if possible. Thank you, Rishabh Kumar. Oh, thank you. I got it through the Q&A mode. Thank you very much. So far, I'll move forward from there. Okay, thank you. I'll take you through the specific pages. You know, there are so many reports and certificates which are required to be given when a company is going in for an IPO. A statutory audit is responsible for giving out so many. So who have had the lucky opportunity of working on such would be aware of it in terms of the work, right? The quantum of work itself is huge in that sense and daunting to a certain extent, challenging and obviously good also, because these are opportunities which will provide you to look at many standards in detail. Right? Because there are certain number of standards or certain standards which typically in an audit situation you would not encounter. These are the standards that we are going to talk about, or at least I'm going to talk about in this session today. So these standards, if you're doing an IPO, or if you ever get an opportunity to get into an IPO sort of engagement, please do so. Right? This will clear all the accuracy to that extent. Okay. First and foremost, what is SA 800? SA 800 is this: special consideration for audit of financial statements prepared in accordance with special purpose frameworks. So again, this is under standard and auditing. This also refers to an audit. This is not about assurance, but it is on audit of financial statements, but special purpose financial statements. What we typically audit and give out an audit report and audit opinion on is referred to as general purpose financial statements. This is meant for users across the board, stakeholders across the board. It is not meant for specific users. It is meant for intended users. Intended users could be right from stakeholders, shareholders, existing investors, potential investors, creditors, lenders, right? So then you could have others, academicians, whatever, whoever you want to talk of and think of, right? All of them are looking at those financial statements, general purpose financial statements. Now, special purpose financial statements, there would be such occasions where you would have to prepare those. Now, there are certain questions. Let me answer that upfront for you. There are companies which have a financial year which is different from the fiscal year, typically MNCs. where they have Jan to December calendar year as their financial year. And they prepare financial statements for the purpose of a tax audit and income tax requirement, April to March. Would those April to March be special purpose financial statements or not? That's one question which is typically asked. But within the standard, within a footnote, they said that those are to be regarded as general purpose financial statements. Let me clarify that upfront for you in that sense. Right? I'm sure most of you would be aware of it. You would have gone through the standards as such and you would be aware of it. But that cannot be considered as special purpose financial statements because it is said so in the standard. If typically, if you were to just read the standard definitions and the like, you would come to a conclusion that probably even those financials prepared for the tax purpose is also special purpose. But nevertheless, since it is so given, it is assumed that it is general purpose. Now, there's a situation in the case of a 800 series where you might have to apply a different framework. Right? You have a company, typically, there are which is following, let's say, US GAAP, IFRS out of India. You got overseas subsidiaries. You're supposed to actually submit consolidated financial statements in an IPO process, in a prospectus as such. In such a case, that would have to be restated to first and foremost, right? But before the restatement, that would have to be actually implemented or complied with in terms of Ind AS. If it is IFRS, then too you'll have to get to Ind AS. Probably there may not be any adjustments. There may be very little adjustments coming out of it. And if it's US GAAP or any other GAAP for that matter, you might have to do that in that sense, right? And if you happen to be an auditor out there, if you happen to be, right, there are certain companies which don't have a statutory audit requirement. So if you happen to be an auditor out there, that would be a special purpose financial statement. That is one example. Then there are companies which are required to follow Ind AS because they are listed. But there are promoters of those companies or there are investors of those companies which per se are not getting covered on that network rule where they are also required to follow Ind AS. But they are a company and they also have to file their financials as such and they are required to follow IGAP, non-Ind AS. In such a case, the Ind AS financials of a listed company would also be required to be prepared under IGAP. And if an audit is insisted for, and if you are the auditor, then that would be again a special purpose framework in that case, in that situation. I hope you follow me in that sense. I'm just giving certain examples where this is happening actually. Okay. So 800, in an IPO process, you will have 800 coming in. I'll take you through those, how it comes in as such. Okay. Then there is 805. 805, this is typical. You won't get many cases of this. And on a practical basis, single financial statement. It is again special consideration in the case of an audit of single financial statement and specific elements or accounts or items of a financial statement. Typically, in a practical situation that I have come across is 800, more than 805 ever, right? But 805, there are times when bankers and lenders require you to prepare something on a cash basis, cash disbursement basis, like a funds flow sort of a thing, right? And they are just interested in that statement more than anything else. So in such a situation scenario where it is only a single financial statement that you're referring to and you have to audit that only, then it is getting covered in 805. Or if there are specific elements or accounts or items of a financial statement, which could be bad debts, which could be debtors, which could be inventory, you name anyone, intangible assets, PP, whatever. Those specific elements or accounts, right? I have come across it, what do you say? Hardly one example of such where I had a chance to work on, right? And which was also way long back. So it's fewer and far further between sort of a thing, situation. So I will focus less on that standard. I'll give you a brief idea, right? 810 engagements to report on summary financial statements. Again, the catch being here, when you report on summary financial statements, prior to that, you need to have full financial statements, which you should have audited, from which this summary financial statements come out, right? When does that happen? That happens again in an IPO process or many other places where you got 3-4 years which you audited, which you already issued out, and someone requires summary to be given out to them. Okay, not the entire financial, they want a summary, and that to be also audited, basically, right? In such a case, the standard would be applicable as such. But again, this would be not so many occasions which will come up in that sense. Okay. Now, 2400 and 2410. I'm sure many of us would have actually had a chance to work on this, some variation of it. If you ever worked on a listed company, you definitely have worked on this. You definitely looked at it. In fact, your review report contains an element which mentions 2410 or 2400, as the case may be. Typically 2410, because you would be the statutory auditors also, and you would be doing a review also in most cases, right? So you would obviously know about this. So I will talk about it a little lesser than other standards as such. Then there are standards on assurance engagements. Again, these are very subject specific standards. All of these are typically assertion based engagements, not direct reporting engagements. So as to say, assertion based is the management or those charged with governance, or there are certain people who actually in the first instance assert so and so, and that assertion is being verified and examined by you, and you are opining on that, right? So, and you don't directly give out a report without any assertion. So typically all of these are assertion based, especially in particularly 3402 as such. Okay. Now, examination of prospective financial information. Again, let me try and dispel some of the misperceptions that have come up, or I have heard of, or people have asked me earlier that, or people have actually concluded and told me that we can't actually examine prospective financial information, nor can we certify that. Okay. People just come up and say that is the case, but that's not the case. Okay. What you can do and what you cannot do, let's be sure about that. So examination of prospective financial information, as the word suggests, this is not historical financial information. But nevertheless, someone wants an assurance from a chartered accountant or a statutory auditor, as the case may be, on that financial information, though it is prospective. So what are you actually doing in that case? What are you supposed to do? We'll come back to that. I'll come to it again going forward. Then there are assurance reports on controls at a service organization. Like I mentioned, this typically would be of interest to those people or people who are auditors of an entity who has outsourced or which has outsourced its processes. Some could be all, could be some business processes, typically financial related, accounting related processes to an outside entity, right? It's like a BPO setup. I have outsourced my operations or processes to a BPO setup, and as an auditor of this entity, someone else would have to look at IFC, internal financial controls or reporting, and that element or part has to be seen out there, right? Accounts payables, accounts receivable, many of those areas, fixed assets, capex relating, are outsourced to the agency. Typically, the chances of that happening within the Indian context by an Indian entity to someone in India would be fewer and further between. But nevertheless, those are also there as such. And I'm sure you would have such clients which may have outsourced it. Typically, we would come across a situation where payroll is outsourced, right? For reasons of confidentiality and the like and whatever. So payroll is one process which many of the companies, though are Indian companies, but that also I seen gets outsourced as such. And if it's an MNC, so MNs, typically if you are the auditor, let's say in US or Europe, you would have many entities which would have outsourced the operations to probably in India, Philippines, or Mexico, either case, right? And they would have been getting it done. So the auditor of that entity at the headquarters or the corporate, they would require this from the service organization. Okay. So this again, the scope in terms of the actual practical use would be far lesser in terms of the overall which would likely to encounter or come across. Right. So 3420. Again, these are assurance engagements to report on the compilation of pro forma financial information. Let me clarify in the first instance what a pro forma financial information is. Typically, This is all again in a prospectus. If let's say you're done for 31st March 22, now 31st March 22 in more than 6 months gone, so you would have to do a stub period also. But let's say 31st March 23, uh, and you go on to acquire an entity after 31st March 23. The financial statements are already prepared, and you go on to acquire, let's say, in June 2023. Okay, so June 2023, but prior to that, financial statements were already audited and signed off on by May. It's a listed company. So June 23, when you actually acquired that entity, and if that company is in the process of IPO or listing at that time, and that is still not concluded, it is still open. June 23, you made an acquisition, then you're required, as per the ICDR regulations and as per the IPO process, typically that you account for that entity acquisition as if it had happened in the earlier period itself, right? In March 23 itself. Okay, so that is pro forma basis. So you're not going to change the financials of March 23 as such. That's been signed off. That is all perfectly fine. But you want to give an idea that had it been acquired earlier, okay, or had it been sold off earlier, it could be acquisition, it could be disposal, as the case may be, right? Then what would the financial statement of financial position look like, right? So that is what is pro forma. It is not going to change the financial numbers as such that you audited earlier and you signed off on, you expressed an opinion on. This is only to give an idea what if this were also factored in. How would the financial position and the financial performance look like, right? So this is what 3420 is basically. Then coming to related services. Excuse me. Related service, again, like I mentioned earlier, there are two standards for 4,400. These are agreed upon procedures. This is typically what you would find in most of the cases where the company or the management requires or wants you to do something, which is not typically an assurance engagement. It could be anything, right? It could be trying to extract information in terms of fixed asset relating, could be inventory relating, could be receivable area, any area for that matter, or any other agreed upon procedures, right? Where they don't want an assurance, they don't want an opinion from you. It's basically fact finding or factual work to be done, right? You find out facts, you report to them, and the view and the opinion judgment would be what is in the management area, and those start with governance, right? So this area is important in terms of the engagement terms. You have to be very clear on the engagement terms. Who is responsible for? Even in other standards also, but pretty much the other standards actually lay down what an auditor is responsible for, what a practitioner is responsible for, as against what a management is responsible for. Here, since this is an open wicket in the sense you can do anything with it, you need to be very clear on the terms and what and how the report will look like, how the deliverable will look like, right? So this is where 4,400 comes in. Let me give an example. In the IPO process, there may good amount of information which is required, which is asked for, good amount of procedures which is required by the merchant bankers or the lead bankers, as the case may be, which they require the auditor to perform and do, which is typically not a part of the audit, which will typically not come out as a part of assurance also. They want that these people be involved for it. Rather than them getting into it, it's better someone who already knows it does that, right? So in that case, this would be that 4,400. They need to agree upfront what you'll get into and what you'll be responsible for. Okay. 4410, again, compilation engagements. This is when you compile financial information, okay, based on records available. You're only compiling again. You're not creating it. So when you're compiling financial information, you're compiling financial statements also, probably based on the information available or given to you. That gets covered in 4410. Okay. I'll talk to you about it going forward. Let me just complete this part. This NHL, I'm sure it's been beaten to death in your minds as such, right? It's been hammered into your brains, but let me nevertheless look at it and start from there again. Again, standard and quality control, assurance services, related services, framework for assurance engagements, audit and review of historical and non-historical. This is the way I am looking at it. I'm just using words out here, right? But so if you're looking at historical financial information, either audit or review, then it's going to get covered in standards on auditing and standards on review engagements. And if you're talking about assurance, but not of historical financial information, then that is SAE series, right? And which has nothing to do with assurance at all. Okay, it's basically a fact finding sort of a thing and fact reporting, standards on related services. Okay, this is how it is. So this will give you an idea of the reference. So I said page 13, narrative, list of EQCS 16 to 19 that I just talked about, structure of diagrammatic, which is page 20. So page 20, I'm referring to the PDF document number. Okay. And now let me start off with SA 800, page 90. Okay. So this is what is given to us. 800 to 899 specialized areas, special considerations. Okay. Prior to my getting into this, again, this I'm only presenting to you that this is in the PPT form. They made it in such a way. In addition, there's a ready reference, which also, summarizes all standards in 4 or 5 page max, right? And if you got a very long, lengthy standard, that also maximum I've seen, it's a 9 page summary. Okay. If you got a 70, 80 page standard, that also comes out in 9 page and well summarized, properly summarized in that sense. And then you got MCQs and the like. So again, okay. Now, before getting into this, like I mentioned, let me come to guidance on company prospectus, IPO. Because in the process of an IPO, what happens is typically there are many reports and certificates which you are required to give out. This is a listing of that. You don't need to be particular about the listing out here, what certificates and the like, and giving an idea. As you can read in the first one, this is a certificate from the statutory audit for opening of the issue, which is to say, have the promoters contributed the amount which they have said and reflected in the financials they have contributed, and which they're committed to contribute or not by the time when they're done. And the address, names, and address of the promoters. Again, you're required to give a certificate out here. If Appendix C, they're given a format also out here. So, like I said, Institute has done a lot of work in terms of formats also, where you don't have to bother much in terms of rethinking about it. So, whatever they actually given in the standards, they have illustrated through formats as to what is required to be done as far as reporting is concerned, conclusion is concerned, right? And in many cases, even representation and in engagement terms also, they are given out. So, this Appendix C is a certificate. Let me just get back to you. Okay. I have this, let me bring it out here. It's the same document that I opened in the other tab, just so that I don't have to do back and forth in one document, and I can directly go through the appendix which I want to refer to in the other document, right? The same guidance note is the same. I just copied it so I can do this. It's better for me to toggle in this sense than going up and down in one page. Now, this is an illustrative format which has been given by the institute, even otherwise. There will be some amount of changes out here because the lead bankers and the like, they will give you their own formats. You'll have to negotiate and you'll have to come to terms as to what is acceptable both sides, right? But nevertheless, the broad content wise would remain the same out here. And as you can see out here, management responsibility, conclusion, audit responsibility, everything else is given, restriction on use and the like. Similarly, as you can refer to para number 8, we have conducted our audit and examination of statement with guidance note on reports and certificates for special purpose. So not every certification or attestation is getting covered in those standards that we speak about, either standards on auditing or on assurance engagements or agreed upon procedures or related services. There are engagements which will not fall within that. which are pure certificates, which are getting covered in this guidance notes on reports or certificates for special purposes. Okay, that was issued way back in 2016, revised in 2016. It was issued, I think, 2009 or so. So you have 2016 that you need to refer to again in terms of what needs to come out as management responsibility, what needs to come out as audit responsibility, what sort of a report do you need to give out, what sort of engagement terms do you need to agree to. All that is given out in the guidance note. Again, with illustration in terms of reports or certificates to be issued. So therefore, illustrative reports which they given out there, right? So that is something that you need to fall back upon in the case. Not everything is going to get covered through the standards in terms of assurance engagements and the like or 800 series. Okay. Now, coming back to this. Okay. If you refer to this, the issue shall provide pro forma financial statements. When we look at pro forma financial statements, that is 3420. As certified by the statutory audit of all the subsidiary business material to the consolidated finance, where the issuer or its subsidiaries have made an acquisition or divestment, including deemed disposal after the latest period, for which the financial information is disclosed in the offer document. Okay, but before the date of filing of the offer document. So what happens is typically in the process of an IPO, let's say if I want to do an IPO right now, I have to file a DRHP in the first instance, then I would have to do it up to September at least. I'd have up to March 3 years and up to September stub period, 6 months. Okay, and I have to file that. But if there's an acquisition which has happened, let's say now in the first week of December, I will have to factor that in because I still not filed the DRHP. Okay, I still not filed the offer document. So even after DRHP, there's an RHP. But okay, that is the process only for the sake of IPO. But 3420 is relevant out here. It's an assurance engagement. So you can go back to the format. Format is already given in 3420. So I'm trying to give an example. When you look at an IPO, there are many certificates which will get covered in guidance note on reports or certificates in company prospectuses, guidance note or report on certificates generally, right? Then this 3420, that's 800 series, and 3400, 4400 also. Again, 2410, because you'll have to do a review. If you're going to file for the stub period, and stub period is of 3-month period, you're not going to do an audit typically, right? You're going to do a review. So 2410 will also get covered. So think about this. If you look at this document, you'll come to a conclusion where all this is used. And typically, the way we look at it, outside of an IPO, right? Which are the standards which you're typically likely to cover? 800 series, yes. Special purpose financial statements. 805, unlikely to a great extent. I'm not ruling it out completely, but unlikely to a great extent. 810, summary financial statements, again, very unlikely. Okay, SREs on a regular basis. For those people who are working on listed companies, there are many non-listed companies also who are actually getting quarterly reviews done, right? For their own internal reporting purposes as such. They are very particular about it. And as a part of good corporate governance practice, they get it done as such. So there also you'll have to follow this SREs. In that case, it's a review of historical financial information. So 2400 and 2410, typically 2410 is something that we have to regularly deal with. And 3400 assurance engagement, typically in the IPO process, you'll definitely have to deal with, like we saw up there, compilation engagements and the like, and 3400, right? 3420 basically. 3402, those are very specific cases where you'll have to work with, where you have a business outsourcing in that case, and there is 4400. This you'll have to typically deal with. Okay, 4410, there are practitioners which I've seen who actually compile the financial statements, but they don't issue out a formal report as such, nor is their name associated with that. So they don't actually bother, but otherwise they would look at SRS 4410 when they are doing a compilation engagement, right? Where they obviously are auditors, there's an independence issue that they'll have to consider, right? But where they are not auditors and the compilation engagement is being performed, nevertheless, 4410 would require you to issue out a report in that sense. But it's your call. It doesn't say that in each and every case you need to do that. Okay. So 4410 typically no, but 4400 is what you would actually be required to do. And IPO, this document, if you see it, the formats have been given for the certificates, which you can typically use as illustrative formats across also to great extent. Obviously, there will be changes that you'll have to make to it, right? To suit and tailor to your purpose and objective. But by and large, good number of formats are available out here. So if you just refer to this guidance on reports and company prospectus, so as far as the implementation and application is concerned, you would be well covered typically. Okay. Are there specific areas where you want to ask about? You can actually do it in the question and answer round also, right? In terms of your particular issues, and we can discuss about those specific standards also. In the meanwhile, I'll just take you through broadly what are the requirements of the standards. Again, the standards, as you're aware, and we are all aware, they highlight to you the precondition for accepting an engagement, typically. On what basis should you accept it, right? Then, how do you plan and perform your audit, right? Then, typically, how do you come to a conclusion or form an opinion or report it? These are the typical requirements of the standard across, if you were to look at it by and large, right? So actually the specialized series and onwards is primarily on that front. The section of the series which you had on audit evidence would not contain anything on accepting the engagement and forming a conclusion out there outright. Okay, but it will be part of the performing the audit in that case. Planning 300 series would be planning typically. Okay, so here you would cover the entire thing, how to accept an engagement, or what are the conditions, or what are the things that you need to look at prior to accepting the engagement. And after you accepted the engagement, what are the planning and performing matters that you need to consider. Okay, and after you've done all of that, after the work has been performed, the results have been obtained, what are the conclusions that you reach, how do you form an opinion, and how do you report that? Okay, and how do you ensure that people understand clearly the scope and your role completely appropriately, right? What you are responsible and what the others are responsible for. Okay, so this is what typically all standards would come up with. And 800, again, it deals with spatial considerations. All other standards on auditing remain applicable. Okay, it doesn't, what you say, override other standards. It doesn't override the 200 series, it doesn't override the 300 series, it doesn't override the 400, 600, 500 or 700 series. Okay, even though there is an illustrative report which has been given out in 800, but it typically says that in the first instance you need to refer to SA 700 series or SA 700 series basically, right? In forming a conclusion, in forming an opinion as such. This standard only requires you what, in addition to that, you still need to do. That is why it refers to as SA 800 spatial considerations. In the case of an audit of finance, the title itself is such. Spatial considerations for audit of financial statements prepared in accordance with special purpose framework, right? Spatial consideration in terms of accepting the engagement, in terms of planning and performing, in terms of reaching a conclusion or reporting. Okay. So what are spatial purpose financial statements? I briefly mentioned, I'll touch upon it again. Spatial purpose financial statements are what is required other than general purpose if there is a spatial purpose financial reporting framework which is required to be used, right? Which is intended to be used by specific users. Okay, the financial statements. In such a case, those financial statements will be special purpose financial statements. How much information, disclosure, note should it contain, right? Typically, 800 talks about entire complete set of financial statements and the financial reporting framework. I give an example. If it is prepared under IGAP and you need to prepare it under Ind AS, let's say, for whatever reason, right? So when you're following or complying with Ind AS, you'll have to do it in its entirety to that extent, and you'll have to be a complete set of financial statements, right? There may be certain amount of notes which may not be so relevant uh, that to make it complete in that sense, that you may avoid. Okay, but that will not change the character that it's a special purpose financial statements in that sense. Okay, now 800 is important in terms of specific users. Now the specific users, there may be other set of users who are not intended users, but they may still be using the financial. But typically what has happened is company has asked you or the client has requested you to prepare special purpose financial statements, to audit special purpose financial statements. Basically, they told you that the special purpose financial statements would be used by so and so. You put your restrictions, you put limited distribution and the like, right? But those financial statements may be used by bankers. They may have been meant for one set of shareholders, one set of investors or promoters, but they may be still used by the bankers because the management may have shared with them. But so long as your restriction para and the like contains, it still remains special purpose financial statements. It does not become general purpose financial statements in that case. Typically, what happens is in a tax audit situation, you prepare financials for April to March for purely for tax audit purpose because the management is requested you to do so. They are a calendar year and financial year, but they requested for fiscal year. Now, what happens is for Companies Act and many other purposes where they require for April to March for government agencies and regulators, they may still be using it for other than direct tax also. So that is the situation. So that is what is getting contained out here. There are some examples which they given you out here. Cash receipts and disbursements, the basis of accounting for cash flow, right? Financial provisions by a regulator to meet the requirements of that regulator. But I gave you examples; those would be sufficient typically. Planning and performing the audit, there will be not so many great special considerations on that front because all the other standard series are still applicable. 200 to 700 are applicable as such also. And typically you're doing a complete set of financial statements. So whatever you would do in a general purpose financial statement audit, you would do in special purpose also. The major changes come out in reporting and accepting. Okay. Once you accepted, you performed your audit, you have to report. Apply SA 700 revised. The very first sentence, the very first bullet point. Right. So as I mentioned earlier to you, the entire series of standards is already applicable to you. Okay. So then what? So you have to be clear out here. These financial statements are prepared for whom? In your opening intro para, your restriction para, limited distribution para, and also things, right? You have to be very clear. That is where you are as an auditor have to do. It may be there in the notes to the financial statements. It has to be there, right? Typically, it has to be there. If it is not, you may have to reconsider how to conclude on it in that sense, how to put it in an audit report. But if it is there, nevertheless, as in the audit report, it has to still be brought out that these are special purpose financial statements meant for so and so purpose and not to be used for any other purpose. So this is what is given to you, forming and reporting considerations out here. I'm rushing. I hope I'm clear in that sense, right? Given my health, I'm rushing a little bit. Sorry and excuse me for that, but I'm more than happy to answer when I get better in that sense at any point in time. Anyone who wants to contact specifically separately also, I'm more than happy to do so. But you'll have to excuse me for today, right? Again, 805 special considerations, audit of single financial statements. What we looked at 800 was complete financial statements. This is single financial statement and specific elements. Like I mentioned earlier, this sort of engagements you would come to you probably in a few and far between. This is not so common. At least I have not come across commonly on a common basis. You may have, then I'm more than happy to take it up separately on offline with you in that sense. But this material is available to everyone, right? It's not something which I made. I don't require to make it because Institute done a perfect job on that front. In addition to standards, it's a very good PPT. It has a very good narrative other than the PPT also, which is a shorter one. It has got MCQs also. If you true and false basis and multiple choice questions, right? So you got 4 option questions also, and you got responses and answers also. So we can test ourselves. And where we think we have gone wrong, we can probably just focus ourselves on that front. Okay. 810 again, engagements to report and summary financial statements. Typically, summary financial statements, some government regulators typically want it, but summary in the sense, summary information is required for some specific purposes. So that may come out actually in assurance engagement, or that may be summary financial statements. Then in that case, they don't want full financial statements. That's over a period of 3-5 years they want it in that case, right? So when they are bidding or they're tendering, they come out with it. Some of the tenders come out in such a manner that you give summarized financial information. Many of them only ask for net worth and working capital. I'm sure you would have come across that. Then those would be in the category of certificates. Those will not fall in this standard. Right? It's an audit required. You're summarizing, but you're issuing an audit opinion. So this is where 800 series comes in, and 800 series is SA, standard and auditing series. Okay. Again, this standards also contain the same thing. What are audit responsibility? What is the management responsibility? Conditions to accept an engagement, to withdraw, resign, right? Uh, how do you plan and perform the audit? Okay. How do you plan, conclude, form an opinion? Typically, you won't perform a audit again. You would have already done so. Then only can you consider it as a part of 810 series. Summary financial statements can be accepted in an audit only if you have done an audit of the full financial statement set, right? So, which could be not in the very same year, which could be in different years also, which could be in the same year also, case as a case may be. So, it's all there out here. I'm skipping it because of the length of material available and given my position. So coming to standards and review engagements, again, most of us have had a chance to work on it. Limited companies, listed companies having limited reviews, right? So would get covered in this. Now, the most important thing which is required to be known is when do you apply 2400 and when do you apply 2410. I'll take you through that matrix itself. Other than that, you know that you need to understand the entity, you need to plan out accordingly, you need to perform analytical procedures, right? And all the like, you are aware of it. You know, negative assurance, you know, limited assurance. I have no doubts that you are not aware about that. We all worked on it. So that is why I'm trying to get it to this specifically. The SRE application matrix. If you are an independent auditor of that entity, and if you're going to perform a review of financial statements as against a review of financial information, we typically do a quarterly results, which is financial information, interim financial information, right? If it's financial statements, complete set of financial statements, then even if you're an independent auditor, you'll get covered in SRE 2400. Only if you're going to perform a review of interim financial information, independent auditor, then it is 2410. Otherwise, in all categories, all cases, it'll be 2400. Right? Why this is? Because interim financial information, and if you are the auditor of that entity for the entire financial year, even otherwise, so you're anyway supposed to gather and obtain understanding of the entity and its environment, right? During the reporting period. So 2400 talks about that steps also. But why would you do that even in a quarterly when you already done it for the period? So that is why in order to distinguish that, it is 2400 and 2410. That's only different. They mentioned that specifically also. Why separate to the 2410 for independent auditors, right? It's the same logic, nothing else. Probably they could have done it through a single standard also, specifying accordingly, but it remains as such, as it is. Okay, I'll move forward from here. If you feel this is a lot of PPT and all this out here, you can directly refer to the ready reference. All the standards that we are talking about, right from 37, okay, or SA 800 is only a matter of 60 pages. That's it. Less than 60 pages. Okay, 147 to 207 at the top out here. So less than 60 pages, 10 standards summarized completely. Read this and then test yourself on this MCQs. Same chapter numbers, 37 to end. Barabar? You'll be spot on that sense. Okay. Again, let me reiterate myself. Reading of the standard cannot be substituted by this. Okay. You'll have to go to the bare text and read the standard. But this definitely summarizes very well. I used it on many occasions for a refresher and it has worked very well. It summarizes very well. That much I can definitely share that with you. And this is material which is prepared by ICI ASB itself, as authentic and authoritative as it can be. Okay, the examination of prospective financial information. Now, here I'll spend some amount of time because, like I mentioned upfront, also there is some misconceptions and misperceptions going around that we can't, audit or give out an assurance or give a certificate on prospective financial information. That goes against the code of conduct, right? Code of ethics and the like. This does not vitiate that. In fact, there's an exclusion for it in that sense also. If you refer to the code of ethics, code of conduct, typically, yes, as an auditor, you are supposed to look at historical financial information, but prospective financial information, you can look at it. But what can you look at it? Okay, that is very important. And what is prospective financial information? That is something which we need to consider. Prospective financial information, okay, forecast and a projection. You need to understand what is a forecast and a prospective can be in the form of a forecast or projection or a combination of both. Forecast is something which you estimate to happen, and with the management will take some action based on that event. You estimate it to happen, necessarily to happen. Okay, forecast is defined here. A forecast means prospective financial information prepared on the basis of assumptions as to future events which management expects to take place and the actions management expects to take as of the date the information is prepared. Best estimate assumptions. That is how they are separated out. And a projection is based on hypothetical assumptions to a certain extent, right? Which you do not necessarily expect to happen. Okay, which you think may happen, but it is not necessarily expected. So difference between a forecast and a projection is a degree of your confidence, okay, in terms of what the things can happen. Typically a forecast is for a shorter period and projection is for a longer period, because you get into the realm of this one, the looking into or grazing into crystal ball to see what would happen. There's a likelihood it can happen, but you can't be sure about it. A forecast is typically 12-month period, right? Typically 12-month period. It could be a little longer depending on industry, depending on the company. But by and large, it's a 12-month period which you can have good assumptions to make, right? Again, situation. If it's a COVID-like situation which hit us, then even a forecast would be a projection or even not even a projection. You can't do anything about it at that time. But typically in that sense, so forecast and projection, prospective financial information, you can do it, but you are going to be looking at the assumptions, okay, the reasonableness of the assumptions, the basis of the assumptions, okay. You're not going to look at and you're not going to conclude on the outcome, okay. You're only going to say as an auditor, the assumption which they have used, okay, are reasonable. The basis of assumption which they've used are based on historical available or what is in sync, right? So that is what you're going to do. So your report, the format of the report is given in the standard itself, where they make it amply clear what you're taking on the responsibility for. They outright say that we are not responsible for the outcome that comes out of it. We are only responsible for looking at the assumptions and the like, right? And the reasonableness of that. So to that extent, you can definitely get into this and you are required to do so. And typically what happens in the case of an IPO also, sometimes some prospective financial information comes out, but that is uh, not as much. It's more on the pro forma more than the prospective, but it does come out as to how you're going to perform at least 12 months or this period or 3 years, whatever. Right? Again, it gives you when you can accept such an engagement, you need to be very sure what is going to be used for, right? What risk does it carry for you, right? Your name, your reputation. So you have to be obviously very careful in terms of how and when to accept such an engagement, right? And what will you be able to do? Okay. And what will you take up responsibilities for? What is the management responsible for? Then how are you going to actually state it in your report and the like? All of this. Obviously, if you want to look at the assumptions, you have to have a good knowledge of the business. You can't just say the management gave me this and this is what I just took it as such, right? You should be in a position to challenge, counter, question, whatever be the case. Not necessarily be an expert or go beyond what the management knows, but definitely challenge to see whether it is reasonable or not. Okay, so they give you examination procedures, documentation, reporting, and the like, and the formats of the reports have been already given. Again, 3402, I'm skipping because it's longish out here and it is not so relevant in many of the cases. We'll not come across this to great extent. To great extent. I can't say that it will not be applicable for many, right? It will be, but whoever wants to get into it further, I'm more than happy to take it offline in that sense because there'll be a long discussion on that front. There'll be more than 40, 50 slides on this. Okay, coming to 3420. Like I mentioned earlier, it's compilation of pro forma financial information. Pro forma financial information is just that, right? It's like a pro forma invoice. It's not an actual invoice. It's just showing that what the invoice would look like. So here the pro forma in case of a prospectus is typically some event which has happened after the filing of the offer document, right? After the, sorry, let me correct myself. After the finalization of the financial statements, the financial information which may be in the stub period, and before actually filing, okay, before actual filing of the offer document, and that event has occurred. Okay, so like I gave an example that you're going to or you're planning to file a DRHP, let's say in the month of December. So you have already got 3 years of restated financial information up to March 22, and you got 6 months September 22 period as a stub period, which also let's say you're presenting on an audited basis. Then you have a acquisition or a merger or a demerger, right, in the first week of December. So that is not forming a part of September as such, but nevertheless, since you're not filed the offer document so far, you're supposed to show on a pro forma basis what would have been the impact as of 30th September as well as of 31st March 22, sorry, right? So for 2 periods, the last financial year and the stub period, that is what you need to show. So that is on pro forma basis. Typically, it happens in a situation where you actually file for a merger, right? And the NCLT approval comes in late and you have an effective date, which is an earlier period. Okay. So you can't be waiting for the IPO process till the acquisition process is concluded. You already on the verge of it. And let's say court order comes in or NCLT order comes in saying, okay, this is now acquired in the month of December, it comes in with effect from, it could be any date, let's say 1/4/21. It could be 1/4/20 also, who knows, but 1/4/21. In such a case, though the order is coming now, financials have been already signed off on, right? You still have to prepare pro forma in that case. Okay. Again, this is an assurance engagement. It's an attestation, assurance, assertion-based engagement. Okay. The client who's required to prepare all of this, and they are supposed to present this. Okay. Long, but common substance of what I was saying is this: you're giving out reasonable assurance. Then there are standards of related services. Again, 4400 is the one which will be the most relevant. Typically, but what I've seen is that many practitioners don't actually, they do the work, but they don't issue the work, what engagement letters on agreed upon procedures accordingly. They may issue the report accordingly, but many times what happens is what is actually classifiable in 4400 goes by way of a guidance note on certificate or some other report in that sense. So we have to be careful on that front. Agreed upon procedures could be anything. Like I said, in the course of an IPO, what happens is the lead bankers will request the auditors to work on many areas, which is not supposed to be the outcome or the output is not an assurance. Excuse me. Assurance in terms of a report, expressing an opinion. But they would want you to be present and work on it. It could be anything. It could be like, number of employees is one area with the lead bankers always want to be looked at by the auditors as such, because obviously the auditors are in line. But that is not a number which is of any financial significance as far as we are concerned. Okay, it's not a gap number basically. It has linkages in terms of the number of employees and the like that you want to see, but you never present the number of employees and the like even otherwise. So those sort of information, many other things will come up, which the lead bankers will request you to do so. That will get covered out here. That is also talked to you in guidance note reports specifically, but it will get covered out here. So when you look at guidance note reports or certificates in company prospectuses, you get 800, 810, 3400, 3420, and 4400. So 5 standards and 2410 and 2400. So 7 standards typically getting covered in one sort of an engagement. In addition to audit, that entire series gets covered even otherwise, right? So this is how it is. So again, objective responsibilities, engagement, when you can accept, how you can accept, what should be the engagement terms, how should be the engagement letter, reporting formats, illustrative formats have been given to such places. Okay, but like I said, because it has to be agreed between the two parties, this is not given in the standard what is required to be done. You have to be very careful in your engagement terms, agreement of the engagement terms, and documenting the same, right? So this is the most important or the critical part out here. Then the critical part comes out in the report, right? How you form an opinion is relevant in other standards. Here, how you draft a report or give out a deliverable, that you make it very absolutely clear that you're not forming an opinion, right? That has to be very clear. That is what the importance of the standard is. I think I'll have to stop here. I'm feeling a little bit more under the weather. I'll have to excuse myself out here. Hello. Anyone from the WIC team?
Yes, sir.
Yeah, I'll have to stop myself here. I'm not feeling good as of now, right? So
You want to wind up?
yes. I'll have to wind up. Sorry.
Okay. Mishra sir, do you have any questions for sir?
सामने देखिए क्वेश्चन आया हुआ है, 5 क्वेश्चन है, कुछ 5 क्वेश्चन नहीं, क्वेश्चन तो नहीं है, नहीं एक भी क्वेश्चन नहीं है.
Okay, sir, so we do not have any questions as of now. So if you want to wind up, so on behalf of WIRC, I give you a hearty vote of thanks and thank you so much for elaborating the topic so vividly that each of our participants will be knowing the topic very nicely. All thanks to your presentation and the standards you showed. Thank you so much.
Thank you, and apologies for the inconvenience, but I'm more than happy to answer. I'll share the deck with my contact details. So if anyone wants to contact separately also, I'm more than happy to do so.
Sure,
But
sir.
really, apologies for the inconvenience and the rush on this front. Sorry.
Yeah. Thank you, sir. Thank you so much.
Thank you. Thank you.
Mishra sir, we can close the session.